one way to measure it is not in the stock market, but in the Treasury bill market. If you look at the spread between the 1 month and 3 month bills, during these periods, you typically see a big stress. People will shift to buying the 3 month paper, not the 1 month paper. And that spread is getting very, very pronounced. But when you go back and measure it.
And what does that tell you?
It tells you that people the Treasury bill market is pricing in a lot of anxiety here, right?
But yet stocks have gone up.
But the question is, does that mean anything with the stock market? And I think what's happened here is that we've seen this. It's kind of a little bit like watching a horror movie, and it's like the sequel 2, sequel 3, sequel 4. People are saying, oh, wait, I know the scary guy's coming around the corner, but it basically doesn't mean anything. And I think there's a jadedness that's setting in. But now here we are going into something a little bit more pronounced with a president who's a different type of president, arguably than the past in terms of, he's kind of seems to be digging in pretty hard here. Are there real meaningful spillover effects into the broader economic picture? Probably not. As painful as
not yet, but Michael, that is the question. Okay, J.P. Morgan out last night, cutting their GDP forecast, not by a lot, 0.25%, or as we say, 25 basis points, right. But they made the cut. Others are likely to follow. At what point does this shutdown, now tied for the record longest at 21 days as of today, at what point does that hit the economy and thus hit earnings and thus hit the stock market?
Look, I would say the thing I'm more focused on, maybe it's just because I'm a market analyst, but the thing I'm more focused on is just the data, the lack of data that we may be getting, some of the...
A data vacuum.
The data vacuum, and obviously with all the volatility we've had since early October, that certainly doesn't help matters much, does it? To be, flying a airplane through the fog without your instruments working is not a fun thing to be doing.
It does a little bit, to use that analogy, I guess, it does feel a little bit like the Bermuda Triangle for earnings, though. I mean, you looked at Macy's yesterday. Right. Now, their numbers weren't terrible.
No.
They were actually still predicting growth. They cut their profit forecast from $4.30 a share to $4 for the year. That's not exactly an 18% haircut, but that's what the market gave it. Do we need to be particularly worried this earnings season?
Well, that's a great point. Look, you look at the broader, you look at the aggregate consensus estimates of all the bottoms-up analysts for the S&P 500. Those were very strong through the Q4. Despite all the volatility, they were very strong until the last few weeks. Some of the expectations started lightening up a little. But here, as we get into the season that's just around the corner, this coming earnings season, Macy's aside, when you look at the economic data, I think you'll probably get a little bit of, forecasting concerns from the CEOs, but because of trade, more so than the shutdown. But I'm actually expecting the season to be pretty good, and I think that one of the things that's missing in all this volatility is we've had a valuation reset, but we haven't had that nice, oh my God, earnings expectations have gone from up 9% down to like 0%, yeah. So you can really outperform in the coming months. I don't know if we're going to get that, and that's actually sort of a problem for the bulls.